Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stennebeck on Bloomberg Radio.
The U.S. Justice Department released files from investigations into Jeffrey Epstein, a notorious sex offender, after Congress passed legislation compelling the department to make the files public. Let's get right to it with Jason Leopold. He's part of the team at Bloomberg News that's been reporting on the Epstein saga. He's Bloomberg News senior investigative reporter and the author of the FOIA Files newsletter. You've spent the last 42 minutes going through these files. What are they? What have you learned? I mean, I know This is just a cursory glance at this point, but I haven't even had a chance to download the file. What's there?
Yeah, there's a lot here. So I haven't had an opportunity to go through everything. Basically, the Justice Department has broken these files down into different categories. There are categories that just pertain to court records, right? Some of these records are documents that have previously been released, but also records that appear to have been a grand jury, or they are grand jury material that judges in recent weeks have said that they would unseal. There's records that actually do relate to previously released documents in response to a FOIA request. There are categories of records that deal with DOJ disclosures under the Epstein Files Transparency Act, and what that contains is there's some Bureau of Prison footage. There's Ghislaine Maxwell's proffer. Some various memos and correspondence that appear to have been previously released. But what I'm seeing right now that appears to be brand new is there are thousands of images. And I have to say, some of these images, even with the redactions, are disturbing. So they're, we're going through that. We're seeing some images of various people in Epstein's orbit who had been traveling with him. There are lots of images of former President Bill Clinton and a trip that was taken in Africa. Right now there are a few documents that kind of show the various correspondence that took place between some attorneys and Epstein's attorneys. So it's going to take a while to go through this, and it's important for me to note as well that Todd Blanche, the Deputy Attorney the Deputy Attorney General, indicated that this would be released in troves, or in batches in the weeks ahead.
When you say they're disturbing, is it because of who you're seeing, who's in them, as you've just talked about them? Or is it because in some ways they're disturbing in terms of their, content? Yeah, fair question. Explicit in some way, and yeah.
Right. So the images are marked. There's like a folder, right, or pictures of the folder, and it's marked child sexual abuse material. Oh. And so then there's photographs where there are, I would imagine that many of them are victims. They're blacked out, redacted there. And, you can see Epstein in some of these photos. So the combination of just sort of like that in your face, like this is child sexual abuse material in and of itself is disturbing, knowing what, perhaps what these photographs show.
Jason, what are you hoping to learn? Like we already know this about Jeffrey Epstein. And what he did and what are the unanswered questions that you hope these files answer for you?
Good question. So I am, as I indicated probably a couple of weeks ago when we spoke, I'm looking for records related to money, related to learning more about his wealth, learning about the government's undisclosed, until we reported it, money laundering investigation that took place in 2007 and 2008 that disappeared when Jeffrey Epstein pleaded guilty to a state charge in Florida. So I want to follow the money, and I'm hoping that these documents, whether it's today or in the weeks ahead, will provide additional detail about the government's own money laundering investigation into Jeffrey Epstein. And I think that once we can, learn more about the money, we can sort of figure out how that financed his, his sex trafficking operation.
Hey, Jason, one thing I love to ask you about is that, you're someone who makes these FOIA requests. There's a lot of material that can come out. A picture, a document on its own doesn't necessarily mean anything. Like, we have to be smart and careful as we go through this stuff. What is what is top of mind for you as you go through all of this? As there is so much that is a smart thing to be looking out for something, significant in this ongoing investigation of Jeffrey Epstein and the people in his orbit.
Yeah, I think that, what is important or what to look out for are, one is that, these records are supposed to be, at least the correspondence, the government's own records, unredacted, right? The text of the material. And it's, in the whether it's email messages, whether it's the government's own memos, FBI reports, looking at to see how they truly handled this investigation, right? The reason we're here now is because, of reporting that the Miami Herald did back in 2018, that kind of, took a look at the U.S. attorney at the time, Alex Acosta, and how he ended up, signing off on this non-prosecution agreement. So,
and he was part of the Trump administration too.
Yes, right, exactly.
The first Trump administration. Yeah.
And so, we've seen reports related to it, but this is really getting deeper into the weeds. So kind of looking at the FBI's own, files related to that, kind of, in a sense, the records, leaving the pictures aside, right? Because there's many different stories that, one could write out of all of these records. But really kind of getting deep into the weeds and explaining to the public how this happened, how Jeffrey Epstein was allowed to, at least initially, escape federal charges. What did the FBI know? What did they learn? Who did they speak to? Are there any other individuals that they were investigating? Thomas Massey, the chair of the government oversight, the House Judiciary Committee, he had said yesterday that there should be 20 different people who should have been charged. Okay, well, who are those individuals? Will they disclose, those names? Did those, individuals, reach some kind of the plea agreement of their own, or cooperated? So there's a lot here. It's re-examining the government's own investigation and what essentially they did during that time that led to Jeffrey Epstein escaping those charges.
Jason, we want to mention the White House has put out a statement, a response to the drop from the DOJ, the Epstein materials. And it says the Trump administration is the most transparent in history by releasing thousands of pages of documents, cooperating with the House Oversight Committee's subpoena request, and President Trump recently calling for further investigations into Epstein's Democratic friends or Democrat friends. The Trump administration has done more for the victims than Democrats ever have. And while President Trump is delivering on his promises, Democrats like Hakeem Jeffries and Stacey Plaskett have yet to explain why they were soliciting money in meetings from Epstein after he was a convicted sex offender. The American people deserve answers. Are we going to get answers out of this? Yeah, go ahead.
First, I do want to say, it's kind of funny that the Obama administration had called themselves the most transparent administration in history. As someone who deals with documents regularly, as you know, prying loose from government, there is no, most transparent in history. So just wanted to note that. But, I think that this is an example of what is going to go on for some time. I don't think that the release of these records, even though there's a lot here right now, is going to satisfy everyone, right? Because there's always going to be those questions. Well, what didn't they release, or why don't we have this, or people kind of interpreting
Jason,
those records.
How will we know it's exhaustive?
That's a great question. And, again, I'll circle back to what Congressman Thomas Massey said. There are certain records that should be here. There's certain categories of records. FBI, what's known as 302 reports. These are interview summaries that the FBI prepares after they speak to witnesses, people that are under suspicion. Those records are not there. Those specific interview summaries, we know it's not exhaustive. But the Justice Department, in response to the Epstein Files Transparency Act, they have to provide additional details within 2 weeks, as a matter of fact, about what they released, what they redacted, why they redacted it. And answer those questions.
But they're already not meeting a deadline today by not releasing everything. Correct.
Yeah.
What's the consequence of that?
Well, there's lots of threats of consequences, and those threats do come from lawmakers, but it doesn't appear to be anything that is certainly written into the legislation itself that says if you do not meet this deadline, you'll immediately go to jail, or you're arrested, or anything like that. Right. So to me, I think the consequences we're going to see at this point is just going to be lots of threats.
Hey, Jason, I know how you're spending your weekend, or at least your Friday night.
Yes. This is my Friday night, probably my Saturday night and Sunday.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Investors pumping money into U.S. stocks at a near record pace as they position for lower borrowing costs, tariff reductions, and tax cuts in 2026. This according to a note from Bank of America. Here are the numbers. U.S. equity saw inflows of close to $78 billion in the week that ended December 17th. The bank said in a note citing data from EPFR Global, it's the biggest weekly inflow since a record $82.2 billion entered the market a year ago. Why?
I don't know. Eric Weiner, let's bring you in and ask you that.
I was asking you, Kara.
Oh, well, I don't know. Is it window dressing?
Eric's the right person to ask.
He's much smarter.
You don't have to
than
answer
me.
the question.
Rhetorical. Eric Weiner is Senior Editor, Equities Americas. He's right here in our Bloomberg Interactive Brokers studio. Why is this happening? Is it window dressing? Is it?
No. Well, I can't say that it's logical, but everybody on Wall Street is bulled up. Like heading into next year, we are basically as crowded on the bull end of things as we've ever been.
That makes me nervous.
That is the flip side of this. I mean, if you talk to a lot of traders, that level of positioning is a sign of danger.
Yeah.
But when you're thinking about flows and you're thinking about what people are, who are portfolio managers are doing, they're chasing the momentum, and everybody's telling them the stocks are going to go up. So it's a rational response. Whether you buy into the logic, that's a different story. And I'm not quite sure about the economic setup for all of this. But
Why?
Well, there are a couple of things. First of all, you have, if you looked at the Oracle meltdown earlier this week.
Yeah.
They're kind of becoming the canary in the coal mine for the AI trade.
Yep.
And the concern really is not just about spending that is going to Oracle, but also the amount of money that they're putting aside for, debt buildups, for leases, for these data centers. You have questions about how much people are willing to pay for the companies to have their electricity funded through this. You're having questions about how much of a return you're eventually going to see, and there's a lot of betting that involves looking way far down the road on money that's being spent right now. And that can turn really quickly. Right. So you have that, and then you have a questionable consumer, and you have the questions about, like if you read the stories about the CPI data yesterday, the questions about, the validity of where we are with inflation. There's just a lot of uncertainty out there right now.
Well, this is what we kicked off the 2 p.m. hour with, talking about with Mike McKee, that in terms of especially the inflation data, we've got to wait till we get a clean print. I want to go back to, though, how bullish people are and bring up some of the targets that are out there for the 2026 close. And I'm not sure if we're going to start with the top or the bottom, but you've got B of A at 7,100. You've got Goldman at 7,600. Your Denny Research, 7,700. Go all the way to the top, and you've got Oppenheimer at 8,100. And let's just remind everybody, you're looking at a S&P 500 right now with a print of 6834. I mean, some of those are some pretty big bullish numbers.
It's not just that. It's that they've been raising them consistently over the last couple of months. So it's that you took it from a baseline, like if you go back to April and everybody goes, oh my God, and everything falls, and then we start coming back out. As we came back out, everybody had to really adjust very fast and put it all back together and say, okay, well, now we're back in kind of a normal environment. And now we're overshooting, and the reaction is as if this trajectory will continue. That is something that I wonder about, but that is clearly where we are. And when you start looking at the actions of strategists over like the last month, every single one is up.
How often do they get this right? Oh, wait, did I ask an obvious question?
Tim just answered for me.
I mean, so these...
Does it matter?
Oh, that's why I asked.
Well, they don't. So this is like, and again, it's
like a parlor game.
We joke about it like it's sort of chimps chucking darts at a board.
It's fun to talk about.
Pick your metaphor.
I know.
Yeah, I mean.
So like, what do you do with this? Like, we put it up. We have a beautiful graphic. Like, what do we do with this?
You look at an aggregate.
As investors.
You look at an aggregate, and and then you look at like the totality of it. So when you have everybody moving in this direction, you are either thinking, okay, everybody is right, and I really have to get with the crowd, which is where a lot of portfolio managers kind of have to be.
Yeah. Or they get fired.
Yeah, or they get fired. Like you can't get this wrong because you're losing money. But at the same time, if you're an investor and you're thinking about this, you're like, maybe this is the time to not exactly buy in directly.
The only thing I would say is Ryan Dietrich, who was bullish about this year, right? Mm-hmm. And I think he was still bullish yesterday.
Yeah, he said the technical that he's looking at is when you see a decline like we saw in April and then a surge higher by more than 10% that same year, it bodes well for the next year. But he's a technician.
Yeah,
so
exactly.
These guys, and I think, critics would say that they pick and choose which signs to look at. But to be fair, Ryan's been right 3 of the 3 last year.
And technical trading is a very specific thing, and the market isn't overbought. I mean, by their standards. So I get that.
Okay, so Carol mentioned we're going to go global a little bit. This is the time of year where I like to bring up global macro movers and look at what stock markets have done well this year. Yeah. And surely S&P 500 up this year by double digits. That's certainly a great year. But Venezuela?
We're getting smoked.
Yeah. Venezuela, Ghana, Lithuania, Tunisia, Jordan, and Slovenia all up more than 50%.
Europe is doing better than us. The number, I was looking at it earlier today because we're working on a story about sort of the year in review. And
Spain's up 50%.
The MSCI All World Index ex-US is up 26%, and the S&P is up 16%. So
some people would argue finally.
Well, that's
Finally.
the thing. It's they were kind of due.
Yeah.
And Europe in particular was kind of due for this. But you don't normally see this. This is the biggest gap that we've seen in about 10 years in an upswing market. So you normally, like, if things go down, the U.S. leads down. If things go up, the U.S. leads up. And this is the weird year where the rest of the world kind of caught us. And a lot of it is self-inflicted. I mean, if you have the uncertainty, once you introduced the tariff uncertainty, and then things kept getting weirder, it became safer to buy into growth in other places. And there was growth actually in other places. So, and if you look beyond Europe, like the smaller countries in Europe and Eastern Europe, they're doing a lot of tech development. And so there is a lot of fast growing stocks that you can go buy into and make a ton of money.
Is it significant, though, it was not a straight move to the upside here in the United States, but is it significant to look, to kind of go back to the bump that we got post-Liberation Day and the selling and how quickly investors came back?
Yes. And if you want to talk about flows, because we were talking about it, look at the flows in April and May. It was like people pulled out of the market in March and then raced back in. As soon as you could get back into the market, you did. And that's
37% from that April low. Now, mind you, we also fell lower, so you had to come back.
Well, we were down like a half, 50%. Yeah.
Right. So, but it's dramatic.
It's enormous. And even with all of this, I mean, we can look at Tesla and say, okay, valuations are crazy. But if you look at like the Mag 7, NVIDIA is actually like kind of cheap relative to
Walmart.
Yeah, well, yeah. Truly. Yeah, it is. They are. These are
on a
stocks.
Forward-looking basis, right?
These are bellwether stocks, and they're not overpriced. So if you want to buy in, it's pretty good.
One of the things I wanted to bring out, and thanks team in the control room, because you pointed out that United Health, which was up as much as 2% or almost 2% today, is now down 0.4 of a percentage point. If I look at Cigna, which was a little bit higher in today's session, it too is down about 0.7 of a percent. And this has to do with what we're hearing from President Trump at the White House when it comes to drug pricing and pharmaceutical companies. This is a reminder that you can have economic fundamentals in a backdrop, but then you can also have something come out of the White House that's going to impact the trade in a big way.
This is the new thing for the market, which is an interventionist president. And what my question would be, if we were sitting here with Jamie Dimon or name the Jensen Hunger.
Oh, Jamie's coming in.
Okay.
That's next.
Stay here. But my question would be, why are you not having a problem with this pro-business president getting in the way of what we would consider your business? The idea, like when Elizabeth Warren said anything, Bernie Sanders says anything, people on Wall Street freak out. But yet you can have the president taking stakes in companies, taking percentages of profits of NVIDIA, telling drug companies, no, you can't do that. And we don't hear a word about the free market.
To be fair, we did ask Steve Moore about this last week. Last week we asked him about this. A former advisor to the president, he was nominated for a Fed governor position. He was extremely critical of President Trump. He's an old school free markets guy. And that's the typical traditional Republican. But Eric, you kind of answered your own question with the evolution of politics and the evolution of the Republican Party and who's in control of Washington, D.C., that model has been flipped on its head.
Absolutely. I mean, the American Enterprise Institute, which I think that's where Moore is, these guys...
Or has been in the past.
In the past. These guys hate this. Like, this is absolutely what's not supposed to be going on. So like when you talk to them, they are like, I don't know why anybody is standing up for this. It's corporate America that's going along with it. And what it appears to be is that they're okay with cutting individual deals.
And just Heritage Foundation, getting the control room correcting us. Thank you.
Oh, it's Heritage Foundation.
Heritage Foundation, where Steve Moore was,
So but all of them are any of these old school economic institutes where they are free market true believers. They don't like this. It's the companies themselves that are allowing it to happen, and they will cut individual deals with the president to make their markets work. And that's a very strange form of market capitalism.
10 seconds on triple witching. What do we need to know?
a lot of volume, and things are pretty muted in terms of index moves. I mean, it's, a lot of action, but it's not really driving price.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Hey, one of the things that we love to talk about, robotics, technology, automation. Bloomberg Weekend recently reported out that humanoid robots are coming as soon as they learn to fold clothes. Count me in.
Okay. Yeah, okay.
Why they wrote this, apparently the team attended a recent Silicon Valley summit, and there they saw small robots roaming and pouring lattes, while evangelists hailed new AI techniques as transformative. But full-size prototypes, they were pretty scarce.
Okay, I want to see what Ty Brady has to say about this. He's chief technologist at Amazon Robotics. Ty is also founding partner of Mass Robotics. It's a not-for-profit organization that's become the world's largest robotics innovation center and serves on a number of boards to promote STEM learning and advancement. Ty, good to have you back on the program. Happy holidays. I want to get to this idea of humanoid robots because it doesn't matter if a humanoid robot can fold laundry for a lot of the purposes that you have for Amazon. How are robots, apart from the Kiva robots, used right now in Amazon warehouses?
Well, thanks, Tim. Thanks for having me on, Carol. Nice to hear you as well. It's always a pleasure to be on the show and talk all things robotics and tech with you. Indeed, the age of physical AI is here. Amazon is building our physical AI systems to help better the customer experience, expanding our selection, lowering cost, fueling the faster delivery times that we know our customers love. But given your question, think of the very practical, everyday experience where we're doing this at a very high reliability and scaling this where we're shipping millions and millions of products every day here for the holiday season. It's really exciting to see. It's very real. It's very practical, and it's something that we're very proud of in what we're doing with our employees.
All right, we want to talk about this. You know we do, and we will. But I do want to pick your brains because I always feel like I learn so much, when you join us.
Bring it.
Is that so these humanoid robots? I mean, Elon's working on them. Other people are like, is it years away? What's your thought, your expertise? You know this world.
I do know this world. I'll tell you that we usually start with what problem are we trying to solve? What's the problem we're trying to solve? And once we figure out the problem, then we actually go to functions. What functions should the physical AI systems do, right? So from the functionality, should it fold laundry? Should it do your dishes? Then we derive form. And when you kind of get the cart ahead of the horse when you start with form first, and then see how can you apply this technology. And we don't do technology for technology's sake inside Amazon. What we do is we solve problems. We solve problems, everyday problems, at an incredible scale that actually advances the state of the art in robotics. Right. So if you wanted a robot to wash your dishes, well, congratulations, you have that. You don't necessarily need a humanoid form to wash your dishes. As a matter of fact, it'd be kind of comical to see a robot pick up the dish, pick up a sponge, put the soap on it and scrub the dish and put it in the drying rack when you have this really practical robot in your kitchen today called the dishwasher, which is amazing and blends right into the woodwork. So we think about function first and then allow the form to follow.
Okay, so we want to talk specifics here about what's happening in the warehouses. Blue Jay and Illuna and more, your systems, Blue Jay Robotics, Illuna Agentic AI, delivery glasses, Amazon's warehouses. These are well known for robotics and the use of tech and AI. How does all of that continue to evolve and specifically impact productivity side by side with human workers?
Absolutely. Yeah, the word I want to use is supercharged. We're supercharging the world's largest fleet of robotics out there with AI, using AI systems to better the reasoning and to better assist our employees, right? We want to eliminate the menial, the mundane, and the repetitive through the use of robotics as a tool set for our employees. And we're entering this era where foundation models are making our robots smarter, more affordable, more adaptable, more conversational, and really reshaping work as we know it, not just in e-commerce, but actually across industries and creating new kinds of jobs.
Ty, I'm jumping in because right now we're showing, for those who are watching on TV and YouTube and our streaming service, what looks like your special delivery glasses. As we continue to show this, just tell us what they're all about. They look like normal glasses, but what do they enable a driver to do more easily?
Yeah, well, it's the fundamental principle that we have is to use them as a tool set. So allow the driver to understand where the delivery should be. Allow them to be kind of hands-free in order to take the picture of the package at your door. Allow them to understand what's the best route to the customer's door. Allow them to see their delivery notes of where they should place the delivery at the right spot. That's just right for our customer. I mean, we're customer obsessed. So any tool that we can give our delivery employees or our frontline employees, that's how we want to use technology.
Are they rolled out?
I think that we're still in the early stages of deployment.
So when would they be fully rolled out across the network?
Hard to tell.
Would it be within a year, maybe within 2026?
Yeah, we are a pretty, once we get to the alpha and beta deployment, it's typically within about a year that you'll see this starting to roll out. And we take a very measured approach when things roll out. We test it, we make sure that it's great for our employees. Does it add value for our employees? Does it create a safer environment for our employees? And then we'll test that at a smaller scale. And then we go into the millions and millions of scale.
Hey, I want to go back to Blue Jay and Illuna. Tim brought up Blue Jay, your next generation robotic system, and Illuna is an agentic AI system. So talk to us about that. How much are they deployed today across your fulfillment network? And I'm curious about milestones that we should all be watching out for in the next 12 to 24 months, Ty.
Sure. So Illuna, we're actually using kind of in a monitor only manner right now during peak. Right, we actually just went through the peak of peaks where we have our largest outbound happening just actually yesterday. And what Illuna does is it gives operators a complete real-time view to help guide their every move. Right. So think of many dashboards now can be consolidated into human consumable text, human consumable recommendations of how to actually deploy the network and how to deploy various robotics inside that building in a way that it gains these more efficiencies. So we're seeing that. That is rolling out today. And then we're really excited about Blue Jay as well. You can think of this really for our same day network. That's a growing network that they have inside of Amazon where we're getting the goods right to the customer's door in a matter of hours. What Blue Jay does is it really indexes on a smaller footprint. You can think of this as three assembly lines kind of combined into one, where we have robotic arms picking orders for our customers out of our containerized storage systems and allowing those to be delivered right to the customer's door. That's really an exciting time.
So if we think about this time right now, the holiday peak, where people are trying to get stuff as quick as possible, specifically, where does the tech that you just outlined have the biggest impact? Is it smoothing labor variability, preventing bottlenecks? Does it improve on-time delivery metrics? Is it all of the above? Is it something I didn't even mention?
Yeah, it is all the above. Plus, what it's allowing us to do is really exception handling, right? When we think about robotics, and you think robotics and physical AI at scale, when you ship millions and millions every day, just 1% of exception handling can kind of eat your lunch. So any tools that we have to help us with the exception handling, maybe one of the systems is not picking up a particular object right. So that learning needs to be propagated through our other manipulation systems. Or maybe a mobility system is having some bottlenecks because of the way the inventory is stored inside of the building. People have really good skills of critical reasoning and critical thinking and using common sense. So tools that allow them to understand the situation better, perceive their environment better through the use of robotics, and then have truly physical agents to help with that in concert with our employees is allowing us to deal with all the exceptions that we see, every day, especially at peak.
Hey, Ty, just got about a minute left here, and I know we've talked about this with you before, and I think it's a fair question. You guys have addressed it about the impact on your workforce, and I wonder if it's smarter to think about maybe not that what you guys are doing in terms of automation, or other companies for that matter, that it means doing away with workers, but maybe it means that you will have to hire fewer workers in the future. Is that fair?
Well, first of all, Carol, any question you ask is fair. So I think it is fair to always ask those questions, and we should always kind of, have the mindset of people first, and which we do inside of Amazon. So what are we doing specifically for our employees? And I'm really proud of this. We're building better machines for them. We're listening to them. We're iterating on our designs. We're rolling out a tool set for them to use that every day at scale, a scale that's almost unimaginable when it comes to what we've done inside of robotics. We're upskilling them. We have a $2.5 billion pledge that we call Future Ready to prepare 50 million people for how technology will impact and change not only the nature of work, but also what their everyday lives. And we're also creating a safer environment with our robotics, eliminating the repetitive, the menial, the mundane, allowing machines to do the heavy lifting and the repetitive actions, and allowing people to work with them in order to use this beautiful thing here.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
A week ago today, when there was expectations or talks and reports that the president was going to do something to reclassify marijuana in terms of the drug classification.
We saw that on Thursday. He signed an executive order directing his administration to move cannabis into a less restrictive federal category. It set in motion a regulatory shift that could alter the legal and commercial landscape for the drug nationwide. For more and to drive to the close, we bring in Dan Arens, portfolio manager of the Advisor Shares Pure U.S. Cannabis ETF. He joins us here from Dallas. Dan, good to have you on the program today. Just give us an idea. I'm looking for the makeup of the Advisor Share Pure U.S. Cannabis ETF. It's up more than 70% this month. It's still well off of those 2021 highs. What does the reclassification mean for these stocks?
Well, this is the biggest thing to happen to U.S. cannabis stocks ever. And we're very excited about the future. As you said, in the past couple of weeks or the past month, there's been a big run up in U.S. cannabis stocks in advance of Trump actually signing this executive order yesterday. And in the last 2 days, crazy volatility. And even yesterday, it was a sell the news type of moment because the world hasn't digested all of the ramifications of this executive order yet. I think some investors wanted to have everything and the kitchen sink inside this executive order.
Would that have been banking? So talk about that because Matt Miller points out to us all the time that the executive order means one thing, but banking is what these companies are really concerned about, the Safe Banking Act.
Yeah, this rescheduling is a huge event, and no one should have expected a stroke of the pen to reschedule cannabis the next day and provide banking. It's a first step, but they spoke yesterday in the White House that it's definitely happening. The Attorney General still needs to sign off on it and make the rescheduling effective. But I've always said it's a multi-leg, multi-step process, even a domino effect, if you want to call it that leads to banking. Once it's rescheduled, banking will be a much less controversial issue. And whether the DOJ gives safe harbor for that or the House and Senate passes it, it's a much less controversial issue. We're very confident it's going to happen. And these U.S. cannabis companies, it's a multi-billion-dollar industry operating in the majority of states. They should finally be able to list on major exchanges in the United States like the Canadian companies do, even though those Canadian companies can't do business in the United States yet. So a momentous occasion, and the market doesn't know quite how to digest it yet. We see a lot of multi-leg upside from here.
Yeah, and you don't want volatility, right? You want things to settle down because the coast is clear. Because I do want to point out, your fund is down 90% from February 10th of 2021. So we're still way off of kind of where it was. It's that banking part of it, right? That really needs to come through in order for this to settle down and be a market that kind of reacts more normally.
Well, when you talk about that, 5-year return, The highs were based on promises made when Joe Biden was running for office. They promised legalization. They promised all sorts of things for cannabis multiple times during his presidency, and never got it done. Trump has now taken that ball and ran with it. This rescheduling is a momentous occasion. But once again, this is a multi-step process. And if the drug, if you want to call it that, cannabis, it's really a medicine in most people's minds, is rescheduled off of DEA Schedule 1, we're very confident that banking, uplisting, and multiple other steps are coming.
Dan, I look at the Bloomberg terminal and what's actually in the Advisor Shares Pure U.S. Cannabis ETF. And I was surprised to see that you have such a high cash position right now. And correct me if I'm wrong and if the data is old, but I don't think it is. The top holding is BlackRock's Liquid Funds Treasury Trust Fund. You have Curaleaf, Terra Ascend, Village Farms, and the company formerly known as Sundial, SNDL, in there as well. But, the biggest holding is cash. Why is that?
No, I'm glad you mentioned that. Total return swaps. Because these U.S. plant-touching cannabis companies cannot list on the NASDAQ or the NYSE yet, because they cannot be custodied at major custody banks and brokerage firms. They're mainly listed on secondary exchanges in Canada. We use multiple swap counterparties and total return swaps to get access to these U.S. Cannabis companies. The top holding is Curaleaf. They're a multi-billion-dollar biggest cannabis company in the world. Behind that, we have Trulieve. We also have Green Thumb Industries. To see the detailed actual holdings of the fund, go to the advisorshares.com website. And there are additional screens in your Bloomberg where you can see the derivative holdings. But it's very important to understand the reasons that the fund has to use total return swaps to get access to these cannabis companies.
But maybe that changes as a result of legislation in the U.S.
Absolutely. But the fund is 100% invested in U.S. exposure cannabis companies.
Hey, Dan, folks who have watched the ride, the ups and downs, if you will, of cannabis and kind of waiting, for either legalization and more regulatory moves, what's your advice to them at this point? It doesn't sound like it's a buy-in completely right now.
Everybody needs to make their own decisions and perhaps get a good investment advisor, of course.
But I guess what I'm saying is you've watched this. I mean, what's the realistic time frame? I mean, yes, it seems to have a White House is much more favorable, but especially when it's in, you're dealing with banking regulation and so on and so forth. I mean, are you looking at a year, 2 years? What's your best advice here? And just got about 30 seconds left.
This is just opinions here. I think a lot less than a year or two. There's talk that the Attorney General could sign off on the rescheduling as early as next week. Well, we don't know the time frames. We really don't know the time frames. But anybody that listened to the press conference and the executive order signing yesterday, it was wording used like it's a done deal that cannabis is definitely getting rescheduled. And we think it's all moving forward.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.